What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Meta platforms.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on.
And in today's video, first of all, I will show you where we are on the price chart and how we caught this movement to the upside for more than 25% of potential profit. Then I will continue with the fundamental news that might drive the price of this asset. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this lowest point, at this swing low at roughly $90 mark. And I've told you that we have very good chances to see a bounce to the upside. And you can find my previous video in the description below. The link will be in the description below in order to confirm that I was right. And I have to say that we had multiple signs that this asset might have a bounce. First of all, on hourly time frame, if we will take a look on RSI, we can clearly see the bullish divergence, and this was the first sign. On top of that, we had an RSI on extremely oversold territories for higher time frames. The daily time frame, as you can see, was extremely low. Then weekly time frame also was extremely low, as you can see right here. And even monthly time frame, let me show you right here, we had a very low RSI, and this means this asset should have a bounce. And I have to say that in my opinion it is not the end, and in my technical analysis I will show you how you can benefit even more from this asset and how you can catch the next trade. So, and first of all, let me show you why we had this bounce to the upside. Definitely the main reason is the CPI data, and let me show you that according to the Bureau of Labor Statistics, consumer prices jumped 7.7% year-over-year in October, below expectations of 7.9%, and the October reading market is slowest year-over-year growth rates since January. On a monthly basis, inflation was up 0.4%, below expectations of 0.6%. Core inflation, which excludes more volatile food and energy prices, also lower than expected, rising just 0.3% from September and 6.3% over the last year. The news makes it more likely that the Federal Reserve will slow the pace of its interest rate hikes, leading Treasury yields to plunge while stocks rallied on the news. Rising interest rates make bonds more attractive by comparison, but falling rates tend to attract more money out of bonds and into stocks. And definitely it is the main reason why we have this major movement to the upside. And let me add the SPY index on this price chart. As you can see, this asset started to correlate with SPY index right after the beginning of November. And previously, this asset, basically Meta platforms, published their earnings report that wasn't so favorable, and definitely they lost because of this a lot of its value of about 36%. And when we can see these massive movements to the downside, we have to see the retracements, because nothing can fall infinitely. That's why we have to be very cautious with potential bounces, and we caught this bounce to the tick. So, and let's continue with more news. First of all, let me show you that SPY index on a weekly basis, as you can see, is almost completely green, and Meta platforms is the leader in this list, and it gained about 24.48% according to this data. And I have to say that right now the consensus analyst price target is $168.26, which implies about 48.88% of upside potential. I have to say that this number is a bit high in my opinion, and in my technical analysis I will show you why I think so. But let me show you this news. We are on Reuters.com, and this article was published just several hours ago, and it says Facebook parent Meta winding down some non-core hardware projects. And let me quote you this: Meta Platforms is exiting its portal smart display business and will wind down work on smartwatch projects, executives said on Friday during an employee town hall meeting. Meta on Wednesday announced about 11,000 job cuts, or 13% of its workforce. The first mass layoffs in the company's 18-year history. Following the layoffs, Chief Executive Officer Mark Zuckerberg had addressed employees but not taken any questions. And definitely, when we can see the massive layoffs, definitely it scares a lot of potential investors, because on one hand they cut their expenses, but definitely they cut their growth, and this leads to lower expectations from investors' standpoint, and this leads to lower price points for the stock of this company. And what should we expect next? I have to say that in general, I will put the link on all of these articles in the description below. You can read this article as well, and its title, How Meta Went from a $1 trillion company to mass layoffs. And definitely this will give you more clarity what should you expect and why this company is losing its value. And right after that, you can make a decision whether or not this company worth your attention in the long-term perspective. And let's continue with the technical analysis. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, what should we expect next? I have to say that this asset reached rather high levels of RSI, and in my opinion, we have this structure, and it is quite difficult to make an assumption whether or not we completed 5 waves in this movement, or if it is just a retracement, if it is just a bounce to unload this movement to the downside. We can see another leg that will break even this bottom, the roughly $88 mark, and in this case definitely we should have a massive movement to the downside in upcoming weeks. But right now we are quite bullish, because with this movement to the upside we have a decent volume, and this volume is quite high, and it is comparable with the volume that we had previously on the massive sell-off. And if I switch to monthly time frame, and I showed you this previously, we had basically we don't have any major retracements for this harsh sell-off from the August 2021, and because of this asset has to have some kind of retracement, and to make the levels where we might land, we have to pull the Fibonacci retracement tool from its highest point to its lowest point. And if this is the lowest point at roughly $88 mark, definitely the most probable range to see a bounce is 0.236 Fibonacci retracement level, and it is $158 and not $168 as you can see right here. And guys, don't get me wrong, it is just a technical assumption, and I have to say that technical assumptions might be in one cases much more accurate than fundamentals, but in the long term you have to rely on the fundamental analysis, and technical analysis only show you the movements, and the direction is made by the news. So, and what should you do if you want to catch the trade? Let me switch again to hourly time frame, and let me show you this movement in details. So we are at rather high levels of RSI, and especially on 2 hours time frame we are still on overbought territory, and this means that we have to see some kind of retracement. And if this movement to the upside is completed, and if it has 5-wave structure, I don't want to dig deep into the structure, because it is quite tricky to make a proper breakdown. Just make an assumption that this is the lowest point and this is the highest, and if it is the case, let me show you more thoroughly. If it is the case, we might land at the ranges from 0.32 all the way down to probably golden pocket range, and we have decent ranges from 104 all the way down to $97.4. And if you want to get the next leg to the upside, and if you believe that this asset should hit high targets, and we have decent probability to see this in upcoming months, definitely just accumulate your position all the way down, and your stop loss should be below the $88 mark. Only in this case you will be on a safer territory, because it implies about, let me show to you, for example, from this range, from roughly $99, about 59% of upside potential and about 12% of downside potential. Definitely 5 to 1 risk to reward ratio is quite lucrative, But everything will depend on their internal news and on the policy of Federal Reserve. So, I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gone live it up on the attack. Baby, I'm bad, I just wanna